This is Paul Donovan from UBS's Global Economics Department. With a prescience and foresight that gives one hope, the World Bank has declared that it thinks there might be a problem with the global economy. With daring and bravado that has to be admired, they've taken the courageous decision to cut their global growth forecasts. Clearly, that will jolt the world's financial markets. Meanwhile, in the real world, confidence is taking something of a nosedive. Japan's consumer confidence came in at a 26-year low, with the October sentiment reading sliding to 29.4 from 31.4. A sub-50 reading is regarded as pessimism. It's worth stopping to reflect on this for a moment. Japan's consumers are saying that they are more pessimistic today than at any time during the lost decade of the 1990s. Things today are felt to be worse than at any time during what was undoubtedly a depression. Prime Minister Azo must be proud. Possibly the survey is overstating things a bit. We see Japan having an economic recession, to be sure, but this is not as dire for Japan as the 1990s. Meanwhile, the US ABC Weekly Consumer Comfort Index for the last week had the full force of the Obama effect and was further enhanced by falling oil prices. A new president and a lower cost for running the family fleet of SUVs. What more could an American ask for? A lot more, it would appear. On the ABC reading, the Obama honeymoon was over before it began, and the confidence measure fell last week, back down to -50. The NFIB Small Business Confidence Index in October, pre-election of course, jumped to 87.5, the third lowest reading since 1973. Even Australia seems to be affected. The lucky country's Treasury Secretary warned that there might be a quarter of negative growth. He's right. There will be a quarter of negative growth. UBS predicts this in the second quarter of 2009. The UK has a somewhat busy day with the Bank of England's inflation report and employment data as well. We expect the tone of the BOE report to be commensurate with the idea of further rate cuts, suggesting further declines in inflation. Indeed, with all the pressures on the UK economy at the moment, there is a distinct chance of deflation in 2009, and this is highly likely on the headline RPI at least. Market moves would appear to have priced in a reasonable amount of that risk, however. Meanwhile, Spanish Economics Minister Solbes has been wistfully saying that the ECB has room for more rate cuts. Of course it does, and it should be cutting rates rather than surveying the collapse of the European economy with a Gallic indifference. However, the rate cuts that the ECB offers will not be large enough nor fast enough for Spain's economic plight. That's the price one must pay for participating in a monetary union that is economically suboptimal. Finally, the world's politicians are floundering around looking for solutions, or at least trying to present themselves to the electorate as coming up with solutions. Japan, South Korea and China will have their finance ministers meet on Friday ahead of the G20 meeting. If hot air alone could inflate the world economy, there would be no recession. Meanwhile, US House Speaker Pelosi has asked Congressman Frank to come up with legislation giving the auto sector limited assistance using the TARP. Economically speaking, America should have gotten out of the car manufacturing business years ago, but there's no telling politicians that. That's all for today. Have a good day.